How's it going, everybody? Welcome into the midweek update video. The account is looking nicely, up almost $600 today, over 2.4%, sitting at 24,800-ish, rounding up. Not that far off from all-time highs of 26,000. We've been kind of between the 24 and 25 the past week or so, which is not that bad considering we have very large losses on the books right now. I mean, Celsius is $3,200. CleanSpark is $900. So those two positions alone account for a greater than $4,000 unrealized loss. But yet, we're not that far from all-time highs. So that tells me we're doing the right things behind the scenes. We are locking up profits with these covered calls, with a few trades sprinkled in there, just collecting premium and keeping the account afloat while some of these positions suffer. So if I look at these positions here, not a lot this week. There were a couple trades. That's right. I have not officially stopped trading. I couldn't help myself with Supermicro Computer, SMCI. It had a lot of volatility the beginning of this week, and I couldn't help myself. I had to take a couple trades, and it worked out. Some nice profits. We'll talk about that. And then Snowflake is actually green today. My leaps are green, up $80. It was up as much as like $160. That's good because these have been red for quite some time, as much as like down $1,000 on these leaps. Now we're positive. That's awesome. It's having a nice day today. But we do have covered calls sold against them, which is offsetting the gains right now. And these covered calls go for another 3-4 weeks. So I really need time decay to occur on these contracts before you really start to see that net profit generate. Now these covered calls of 126, this is actually the product of a roll, which means the cost basis on these covered calls is actually skewed, is incorrect. So Robinhood says I'm down $100 on this covered call, but if you factor in the net credit, taking into account my first covered call and then the result after the roll, I'm really down like double this, like maybe $200. So it is a net loss right now. And I'm going to talk about the roll and what exactly happened and the explanation behind it. Other than that, nothing's going on. CleanSpark puts still active. Looks like they're green. CleanSpark covered calls are also green. I'm debating whether or not to take these off. I mean, I'm up 60% and there's still another 3 weeks to go, 3 or 4 weeks, 3.5 weeks. So maybe it's best to just close them and then see what happens. But I'm also not really in a rush. I don't mind just leaving them on for the remainder of the cycle. I don't know. We'll see. But let's get into TradingView, take a look at some of these charts and go over what's going on and some moves that I made. We're going to start with SMCI, Supermicro Computer. This thing has been all over the place. It's up 7% today, had a big drop yesterday after a massive pop Monday. Lots of volatility. Not an expensive stock anymore either because I had a 10-for-1 split. So it's at 48 now, which means the contracts are affordable. So you get all this volatility with affordable contracts. It does make for some nice trading, at least the opportunity for it. So this thing caught my eye Monday when it was up 15%. And when it was up 15%, I didn't see it up 5%. I didn't see it up 10%. The first time I saw this on Monday, it was already up here. And I said, wow, that is super extended. The RSI is over 90. It's been green candle after green candle, and it's up 15% without any retracements. You can definitely get burned playing a counter trend trade where you're catching a falling knife or you're shorting a massive pop. For sure you can get burned. I've been burned in the past. Because if you start here with the overbought RSI, it can keep going. And then you add here, it keeps going. You add here, it just keeps going up, up, and up. And your average is stuck down here, and you just get burned. So yes, I've been there. That's definitely possible. But when I saw it, it was already up 15%. Like all those entries that I just drew, like it was already beyond that. The RSI was over 90. So I felt super, super, super microcomputer confident that of building a short position way up here. So I didn't buy my first put until right about where the circle was. And it did kind of move up. I bought another one here. It dropped, but it wasn't enough what I was looking for. And then it popped back up, so I added some more up here. And then eventually on this drop, I got out for a nice profit of $211 on, I'm shorting this thing, shorting the pop. As you can see, it didn't really sell off. It actually went back to the high of day a couple times and closed up 16%. So it pretty much held the move, but it did offer opportunities for a short because it has to take a breath at some point. It has to pull back at least a little bit, even if it does end up going back to the highs. So I took advantage of that. And then the day after, it pulled back a lot in the morning, dropped 8% in the first 5 minutes, was therefore oversold, and I started to buy some calls on it. The volatility's high, and I figure a huge move to one side is probably going to be bounced back and retrace, at least to some extent. This one, kind of like the other one, didn't really retrace. It continued to stay at the lows, make new lows, and it didn't gain any of it back. Just like it's the opposite of Monday. It held the highs. Tuesday, it held the lows. However, I was able to, with strategically adding to the position, buying calls, here, there, and then more down here, I was eventually able to get out on one of these pops, I forget which, for a $100 profit. So it wasn't insane, but I did capitalize on that volatility to the downside for a $100 gain. So that's $311 total in profits on 2 trades. Those are the only things I've locked up this week so far. I haven't closed anything else, so those are the only profits on the week. $311 just from trading too. Something I said I was probably going to stop doing, especially after July was not good with trading. I lost over $700, which brings down the account. It's like an anchor on the account, on the wheel strategy, because trading, doing these buying the puts, buying calls, like that's not the wheel strategy. So losses doing that, impacting the success of the wheel strategy, sucks. You don't want to do that. Like, oh, the wheel strategy is going great, and now I just lost $700 doing something else. That's foolish. So I was gonna stop with that, but last week I traded Tesla a couple times. This week I traded Supermicro Computer a couple times. All in all, net profit of $903 in 4 trades over the past couple weeks. And that actually gets back all of my losses from July. So instead of a $700 detractor from the wheel strategy performance, trading has actually improved my account by a net $175, I believe is what it comes out to be. Let's just double check. Yeah, 175. So I'm up 175 on the year from trades like these. So that's good. That means the account is right where it should have been before any of the trading stuff took place. And we're good. We're actually a little bit better by $175. So I do not want to continue to make a bunch of trades, but if I see crazy opportunities like that where a stock's up 15% without any retracement or any significant news, I'm going to be tempted to take a stab and make a trade on it. But I'm not going to make it a primary focus by any means. Better to quit while we're ahead, right? So that was Supermicro Computer. Now we'll just take a look at the wheel strategy trades. So Clean Spark today up 1%. It was above 10. At the end of September, it was making a nice move, almost to 1050. Came all the way back down to the low 8s. Came back to 950 last week. Retraced Monday. And now we're just sitting at 913. So again, just sitting in that range between 850 to 1050. We have puts, we have calls. I've cash secured puts at 8 and 7, and then I have covered calls at 1250. Nothing new. That's been the case. That's still the case. And Clean Spark has just been sitting in the same range that we've been talking about, between 850 and 1050. I wish it was closer to the 1050 end of the range, but overall just sideways, nothing good, nothing bad either. And, as we have puts and calls sold, which is effectively a covered strangle option strategy, sideways is actually beneficial because, as you saw earlier on my position screen, my puts are profitable and my calls are profitable. So that's the beauty of selling premium, of selling time value, of selling volatility, is that when the stock isn't volatile and it doesn't make a big move, you win, and you can win on both sides at the same time. But yeah, nothing crazy here. I just hope that it can hold 9 and not really go much lower than that. But if it does, I'm here with a net to catch some more shares. Going to Celsius, thankfully, has a green day, but it doesn't matter because it's still red on the week. It's still down 2.7% on the week. Look at this pathetic chart. Will it stop? I don't know. When will it stop? I don't know. It is officially oversold on the weekly chart. That's a pretty big deal. Like, the weekly chart moves slow. Indicators on the weekly chart move slow because you have to wait a whole week before you get that next data point, whether it's a moving average or an RSI. So the fact that even the weekly chart is oversold tells you that's how much it's been sold off. The daily chart has been oversold for a little while, and it had a 4.7% red day to start the week on Monday, making a brand new low. Tuesday, continuation got down to 28.20, thankfully up a little bit now. But, I mean, we need to get above 30 before I can breathe a little bit. Being under 30 is not good. This is just a small little pop, small little retracement of an overall downtrend. I'm not convinced of any green day until it really gets above or towards 35. Like, I want to see a new high. These little pops mean nothing until it makes a new high. And right now, the previous high is basically this level right here. Or maybe, if you want to be a little more aggressive and hopeful, maybe this high here. If it doesn't get to that, then it's still trending lower. And that's not good. But that's just been the story. We have plenty of time on our leaps, and we just got to hope for the best. I have no covered calls sold against it. I already closed the ones that I had sold, and then it moves lower, so I can't really sell new ones until it makes a nice pop, which it is just incapable of doing. And that's really the end of that. So it doesn't release earnings till November 7th. That's still quite a ways away. Maybe we'll get some clarity on the company and what they're capable of then. But right now it's just red day after red day after red day. So not good there. But we are up today. Snowflake, on the other hand, look at this. This is actually much better than what I had just saw when I started the video. It's now at 118. It's up 4%, and it's at levels we haven't seen since the end of August, which is right about where I got into the position. Yeah, I bought the position. I got into it somewhere around here when I made this nice 15% drop. That's where I bought into it. And then I added another contract, and then that was it. That's a full position. And then it sold off even more, and then just lingered on those lows. So I've been down quite a bit for quite a while, and not fun. But here we go today, up nicely, clearing these highs, clearing this resistance that has been struggling to get over for the past month and a half, and rather strongly too. I mean, the market's only been open for 2 hours. It's only 11:35 a.m. right now, so it very well could come all the way back down. That's always a possibility. And then looking at the close of the day could change how we feel about it. But currently, as it stands right now, this is very bullish. It's breaking those prior resistance levels, and we just got to hope it holds it. If it ends up being a fake break by the end of the day, that's not a good look. But right now, nice bull flag to start the morning because it had a nice push, went sideways, and is now having a brand new leg higher. That's pretty strong. That's a pretty strong intraday move. I would be shocked if it came all the way back down, but it is possible. But anyway, you can see here the white line this is the point of profitability on my position, which is important because that means my leaps are green. Now, this point of profitability is actually relative to the covered call expiration of November 1st. So I need it above 118 on November 1st to be profitable. But because it's only October 9th, I'm going to be profitable even sooner because not as much theta decay has come off as it would have on November 1st. So the position should be pretty nicely green. Let's just go check Robinhood quick. Yeah, so now the leaps are up $320. And my covered calls down 182. That's actually a little bit misleading. It's more than that, but we'll talk about that in a second. So that's very nice. I have covered calls at 126. So I do have a lot more room to gain here if it keeps going. My upside is capped, but not really until 126. So let's see if we can keep this going. Now, I got to mention the move that I made yesterday. And this is actually helping me out. Go back to Robinhood. I rolled the covered call that I had sold in this thing. So originally, a couple weeks ago, when I sold the covered call for the end of the month, I sold the 123 strike. Actually, let me go find that. So right here, it was actually 2 orders. So I sold one covered call for $200 here, and then I sold a second one for $212. Because they were filled at different, there was a partial fill. I had to sell it again like a couple minutes later. So overall, I had 2 covered calls sold for an average credit of $206 per contract. So over $400 was brought in premium, which is excellent. It's a great dollar amount, but it's at the cost of limiting my upside. Obviously, with a 123 covered call, I don't really stand to gain much beyond 123. And because of that limited upside, which is a bad thing, my rule is that you need to be compensated appropriately to do that. And my rule has been a 30% annualized return. I'm not going to limit my upside, cap my upside, unless I get paid sufficiently. And that minimum is 30% annualized. That's been the case the whole time I've been doing the wheel. The thing is, though, with Snowflake, with an average cost of $3,000 per leap, a 30% annualized return from when I sold it to the end of November, that whole 4-week period, I only really needed $75 per contract. But I collected over $200. So that's really good. That means I generated a much higher return than 30%, which is awesome. However, it comes at the cost of my upside. And there's been so many positions in the past where covered calls sold closer to the money, closer than they need to be for the sake of more premium, has caused me to lose out on a lot of leaps profits. Or if I just really sold them further out of the money, still generating a solid return, I could have generated a lot more profits on the leap. So I really want to try to do that. So again, I only needed $75 to generate that 30% return, and I collected $200. I collected way more than I needed to. That's a good dollar amount, but I want to give my leaps the chance to really make a move, because I'm going to make more money on leaps profit than I would on covered calls if it does make that move. So what I did was I rolled it for a net debit. So I closed the 123 call, and then I sold the 126. So I didn't change the expiration date. I just straight up changed the strike, which is obviously, since I'm not adding more time value, is going to cost a debit to do so. So I closed them for $251, or I bought them back for $251 and then sold the next ones for $181. So this was a $70 net debit per contract. So instead of having a net credit of $206 per contract, it's actually a net credit of $136 per contract. So $70 less, but as a result, I've increased my covered call strike by $3 per share. I probably could have gone even higher than that and have a bigger net debit, because like I said, I only needed $75 net credit, and now I have $136. So I'm still overshooting my goal, but at the end of the day, I still increased my strike. So now if we go back to TradingView, you can see the results of that. So now I have 2 covered calls sold at 126 for an average credit of $136 per contract. Before, this was at 123, the green line, my covered call strike. This was at 123 before, which, I mean, is above my point of profitability. It does allow me to get some upside on the stock, no doubt about that. But it's still pretty aggressive. Like, I didn't need to sell the covered call this close to my average. I should sell it further out, as far out as I can go, while still getting that 30% annualized. I don't need to capture 150% annualized return. Let's just, go further out of the money, give ourselves more upside. So that's what I did from 123 up to 126. And, it might not make that move. And in which case, I would have been better off with the higher covered call premium. But if it does make that move, which will happen a lot of times over my trading career, over your trading career, if you're doing this strategy, it's going to happen. The stock is going to make that move faster than your covered call expiration is, and you're going to wish you had a higher strike. It's just going to happen. And when it does happen, you're going to be rewarded handsomely because the profits on the leaps or your shares are going to outweigh the increased premium you could have had if you were more aggressive. It's just always going to be the case. So it's better off to just position yourself that way. So that's what I did. I paid a little bit of money, reduced my net credit, but I increased the strike by $3. So we have a lot more upside to capture. Snowflake now up 4.5%. You love to see that. So good stuff from Snowflake. Already paying off the fact that I rolled those calls to a lower delta and giving myself more upside. It's already paying off with this massive move. So I guess that was some good timing. But we have more room to capture. We have more room, more upside to capture, and we'll see if it can make that move. And I might close it early. I could close it early if it makes a move up to 122 this week. If it really moves quickly, I might just end the trade given a net profit that I'm happy with. We'll see what ends up happening, but that very well could happen, or we just ride it out to November 1st. I don't know. Those are the positions. Let's go back to Robinhood, and let's just take a look at the account quick because Snowflake has moved higher since we started, and the account's over 25,000. The account's up $900 today. This is awesome. Now we're only 900 away from the all-time high, even though we're down $3,000 on Celsius and $900 on CleanSpark. Look at that. We're up 1,000 today. Over $1,000. Snowflake up 400 bucks. 430. The covered call is obviously taken away from that, but man, that is nice to see. That is nice to see. So that's it, guys. Thank you for watching. I am not 100% sure if I'm going to make a weekly recap video because this weekend is my wedding. And then I'm gone for 2 weeks after that. So Friday is the absolute last day that I would make a video. And I'm probably not going to. That's just what I'm guessing. It's probably not going to happen. So this is probably the last video for the next few weeks. So take a good look at the account now because who the hell knows what it's going to look like when I'm back from vacation. Hopefully higher. But okay, guys, that's it. Thank you for watching. I hope you enjoyed. If you did, hit that like button, subscribe for more content, and I will see you all next time.